Now, this is your gold, silver, Bitcoin market update for the week ending December 18th. It's been a fascinating week ahead with gold getting some gains, silver getting some gains, Bitcoin seeing an all-time high. So let's dive on in. I'm Miles Harris, and this channel provides global macro insights and champions the importance of sound money in a world gone crazy. So please do consider subscribing. Now, starting with the gold price, we can see that the gold rebound has continued with gold up just over 2% on the week. Meanwhile, silver has absolutely rocketed and really does appear to be leading gold out now, up almost 8% this week. The Fed's balance sheet has hit a new all-time high, and the dollar index actually hit 89 this week, closing the week out at 90.01. 10-year Treasury yields were up from 0.92 to 0.934%. Meanwhile, oil, WTI oil, on this reflationary trade that's really taken hold of markets now, is up from 46.62 to 49.14 this week. A sizable move, and really helping silver and inflation expectations to pick up here. The gold chart has broken through key resistance at around 1860 and has broken through this downtrend here. It would just be lovely if we could now see gold continue to break through previous resistance going back to 2011 that we can see just shy of 1920 there. That would absolutely confirm that gold is ready to go. Now, silver's recent resilience has really been something to behold here, and this is almost uncharacteristic in comparison to previous metals bull markets. But we can see it's broken through that downtrend and has closed the week just shy of $26. It would have been nice just to get into that $26 zone, because that's the clear resistance that we can see here. Now, perhaps there might be a retest of this downtrend, and silver's breakout this week really came onto the back of the FOMC outlook for inflation and interest rates. Now, if you want further confirmation that it has clearly broken out before diving in, well, we'd like to see it get into that $26 mark, and then it would seem like we're really ready to take off. But when we consider the real price of silver going back to previous bull markets for silver, we can still see just how incredibly undervalued the metal currently is, and this really does show what a long way silver has to actually go here. And so, as a consequence of silver's big gains this week, we've seen some substantial gains for the silver miners. We've seen SilJ up almost 10% this week. Here's First Majestic up over 16% this week. Really sizable gains, and you can see that came midweek here, where silver really did take flight. And if we look at the longer term outlook for First Majestic, we can see that it appears as though First Majestic AG is ready to break through this downtrend. It's going to be interesting to see what happens in the trading coming this week. But one factor that really does suggest that silver has broken out is the fact that silver has now broken through this resistance on the gold-silver ratio at 76 ounces of silver to 1 ounce of gold. So we can see that ratio is now down to 72. So it's been a really substantial week for silver. And if we compare the gold and silver longer-term outlook here, we can see the silver prices on the left-hand side, which are in orange, of course, and the gold prices in blue on the right-hand side. We really can expect silver to actually overtake gold on this sort of scale. And again, that just emphasizes how much potential silver really has as this reflationary trade continues. Further emphasizing this is the fact that our risk-off indicators, while we've seen a slight move in the Vanguard Utilities ETF, it's down over the course of the last month quite significantly. Meanwhile, the TLT 20+ year Treasury Bond Index has continued to move downwards, and SPX has continued to move upwards on the week and on the month as a whole. So this risk-on atmosphere is set to continue until year end, and I really expect it to continue beyond beyond that, as we see a flood of new liquidity and the prospect of stimulus coming through as well. It's also been a really big week for Bitcoin, hitting a new all-time high there of 23,749. Big dramatic move in the price of Bitcoin, and it really has been a substantial gain on this week. Looking at the chart here, we can see now the resistance is clearly that 20,000 mark, but it's just clear sky above that, which really is going to make things very interesting as the institutional money continues to flood in to the cryptocurrency market here. And so what we've also seen is that the Fed has promised to continue its debt purchases, to continue to boost the flagging US economy, as the Financial Times reports here. Treasury buying to continue at present rate until substantial further progress made on recovery. We can just expect this to continue long into the future. And just remember that the key mantra of our central bankers is the notion of price stability, which this great article gets at by Stephen Gleason, where the Fed recommits to misleading the public about inflation. And so that notion of price stability, just have a look at these charts here. Wage growth is of course dwarfed by these rising costs for college education, healthcare and housing costs, meaning for the middle and lower incomes, it's so incredibly difficult to get ahead. So really they're just reinforcing their narrative of driving inequality further up. And so on to Dr. Copper, where we can now see here in this tweet by Gigi Penna, the global stockpiles of copper have slumped to the lowest level since 2014. Now, Dr. Copper is continuing to actually offer us a really encouraging outlook for the global economy. As we can see, copper prices have continued to pick up this week, and this really does appear to be significant. A lot of this, of course, comes off the back of the hope for stimulus and massive infrastructure investments that are likely to follow this whole crisis that we've had to endure this year. And so let's finish up there by just reminding ourselves the long-term perspective here, that we've got a monetary policy bubble, a fiscal policy bubble, stock and bond market bubble, financial repression, war on wealth, inflation, low interest rates, and of course this coming world of CBDCs, which is going to further erode the value of our money via MMT, UBI, and even direct central bank budget deficit financing, which is actually taking place globally throughout many developed nations now. We've got deficits, debt and debasement, and we've got the prospect of this new monetary reset coming ahead. So there's very, very interesting times to come. And the outlook for metals as well as Bitcoin does appear to be incredibly positive when you consider all of these aspects together. I hope you found that little look through the markets there useful. Thanks so much for watching. Do consider subscribing, and I look forward to seeing you next time. Bye bye.